So the number one question that my team gets asked by folks that are relocating or buying in the Charlotte area is it a good time to buy? Should I hold off and wait? Should we see what the market does? And this isn't a question that just came about in the last few months. We've been getting asked this for years. Pre-COVID, this was still a question. During COVID, it was also a question. And today, it remains the number one question that buyers ask us. I'm going to share my screen and show you what stats we're looking at to analyze supply and demand imbalances and the future of where prices may be going. Once a month, our local realtor association publishes what they call fast stats. And these are basically a high-level overview of what's going on in the real estate market. We can drill down as agents for different counties, different cities, different areas. Today, I'm looking at Mecklenburg County. This is a relatively large swath of geography that covers the areas that you can see shaded in green here on my screen. So we're going to look at these stats. I'm going to go through these with you and sort of share what some interesting changes that we're seeing here in the market. Looking at changes, we typically look at things year over year. Month over month can be helpful, but typically does not make a trend. One 30-day cycle, even a 60-day or 90-day cycle typically does not make a trend. So we tend to look at year over year to see exactly what's happening in a big way. Number one thing you'll see is that new listing inventory is still low. New listing inventory is down 24% year over year. And that is certainly exacerbating the supply-demand problem that we're seeing here in the market. I want to point this out to folks that are concerned about the market blowing up or another 2010 sort of incident where we see, tons of homes hitting the market, prices collapsing, that sort of thing. We are not seeing that. We are seeing listings that are still very sluggish to get on the market, and we are still seeing more buyers than we are sellers. As we'll continue to go through this, but we look for a healthy supply-demand balance to mean around 4 to 6 months of every home sitting on the market. That's what most economists and what the Realtor Association considers a balanced market. That is when homes are sitting for a number of months and not flying off the shelves. They're not doing what they did last year, which was multiple offers the first weekend on the market. And we are still not there yet, believe it or not. And this is certainly not helping. So sellers not putting their homes on the market is certainly continuing to exacerbate this problem. As we look at pending sales, this is year over year. Pending sales are down 10%. And again, this is Mecklenburg County. Charlotte stats are slightly different within the city itself. But pending sales volume, if you read or listen to the news or the headlines, you may assume that the real estate market has just completely fallen off a cliff with interest rates now as of the publishing of this video, in the 5%-ish range. And again, talk with your mortgage lender about rate specifics. But home sales are down 10%, for the pending sales, but they have not fallen off of a cliff. That's certainly other markets that we've seen major shifts. Charlotte has not been one of them. The next stat we'll look at is actual closed sales. So this time in last year, we were looking at 1,400 closed units in Mecklenburg County. This year, more like 1,050 closed units. That is certainly a decline. That's a 26% decline. But again, commensurate to the amount of new listings that are not hitting the market. New listings are down 24%, so sales are down 26%. It sort of makes sense in all tracks. Looking at median sale price is still ticking up, interestingly enough. I saw yesterday CNBC published an article mentioning that home sales, or the home price for last month, actually ticked up much more than economists were expecting, which is sort of a double-edged sword. I think the Fed is trying to taper down home price inflation by raising interest rates, and that certainly is going to come do the opposite of what they're looking to do. Looking at average sale price is up 8% here. And this is the biggest thing that I think that buyers that were really exhausted with last year's market, they were putting in offers, they were going really aggressive on their offer, and they still were not winning the house. Things were selling for 101.8% of list price on average. This year, we're at 96% of list price. So buyers finally have some breathing room. They can finally make an offer that is actually market-based rather than emotionally based in order to just secure the contract. And so we are definitely seeing that a lot of homes are still selling first weekend at full price or even overpriced or even over asking price. But a lot of homes now are sitting on the market, and buyers finally have the opportunity to pause and decide exactly what they want to do and what they want to offer, and sort of craft that offer in an intelligent way. So anytime I see triple-digit changes in these percentages, I really take note, because this is the really dramatic changes. If we see things at 40, 50, 60%, 100%, and that's where we're starting to see some of these changes right here. So days on market until sale and cumulative days on market until sale are both up in a huge way. So Previously, we were 22 days on market this time last year. Now we're at 50 to 51 days on market. That is a massive swing. And again, buyers that were having to, they were out-of-town buyers. A home would hit the market. They have to book a flight in 5 minutes to be here the next day. That's no longer the case. We will often see homes that are sitting for a few weekends in the market. And of course, the more time it sits, the more leverage those buyers have to make an offer more in line with where they want things to be. But looking at average list price, the average list price is up dramatically. You'll notice that list price is up 14%. But again, that list to sale price, folks are coming off. Sellers are getting realistic and coming off of their list price. But sellers oftentimes want to try the market. They want to go in higher. And then the home sits for a bit. They do some price reductions. And then ultimately it sells for below that list price currently. Inventory of homes for sale. We are seeing that the overall inventory, this is the stagnant level of inventory. This is not new listings. The stagnant sort of inventory that is sitting is up quite a bit. That's up over 60% at 63%. So that is a good thing for buyers. A lot of that is stale listing inventory. Homes that have been sitting for quite some time. But again, those new listings, those hot homes in great school districts or great areas that folks want to be in, those are the ones that we're seeing sort of a slow trickle on the market. Month supply of inventory. This is again that average, the amount of time that we would look for a balanced market that economists would say is 4 to 6 months worth of inventory. We are still so far below that. We are at 1 month worth of inventory. So those that believe that the market may be collapsing or showing major signs of jitters, I don't really see that right now. I've been selling real estate for 17 years in the Carolinas. I think that we are in more of a normal market. We're shifting to more of a balanced normal market where rates will be 5, 6, 7% on mortgages. Inventory, I think, will climb to 3 or 4 months worth of inventory, and prices will hopefully begin to flatten out and begin appreciating in a more normal manner. 1, 2, 3, 4% per year, not double digits like we've been seeing over the last few years. If you have any questions about this data or you'd like to get the most recent report, feel free to reach out and we'll send it your way.